morning, everybody. It's Chris here from Student Education with the 4 Majors Analysis Update for the 26th of April 2011. Hope you had a fantastic Easter weekend, everybody. It's been a great time with family and friends and enjoyed the weather. Great weather this weekend across the UK. Woken up this morning, funny enough, to overcast conditions. So, well, made the best of it while it was here. Back to the charts. Just looking at the euro against US dollar on our CTC strategy template. Let's have a look at the daily. Over the Easter weekend, prior to the Easter weekend and yesterday, not a lot of movement. Still creeping up, and then Asian market trading this morning, we've seen price revert to the downside. Strange as it seems, you can see that price has broken a long-term resistance level at the 14,500 mark, and now very tentatively moving higher. And then we're pulling back. Now this pullback will be in conjunction with the breakout, pullback and then the continuation setup. You'll notice that the pair on a daily time frame is trading long for a long period of time. The 20 period moving averages had acted as a great support area for this pair and did so quite nicely not too long ago, almost a week ago. We had a big pullback. Initially thought there was a lot of negativity creeping back into the market, but it only fell back or pulled back as far as the prior resistance in the past, acting as a great support area. And then we saw a nice bounce and a retest of the previous highs at 14,500, and now we've broken higher. Now we're just getting the pullback. Now the pullback needs to stay above this 14,500 to confirm that there's still momentum to the upside. If it fails to break and close, or to close higher and trade higher than 14,500 for the remainder of this, well, for the rest of this week, then we could see potential downside. However, if it stays above the 14,500 mark going into the latter part of this week, then we can confirm that this is definitely a support, which was a prior resistance, and then we could see further upside movement from that. CTC on this daily time frame is well positive. You can see that definitely moving higher. The moving averages are well evenly spread out, and pretty much all the figures are pointing up for more upside movement. Just be aware that the momentum the last couple of days has been really iffy, primarily because it's been a bank holiday long weekend for most, and being Easter, not a lot of trading was done on basically on Friday and yesterday, Monday. So let's see what happens. I mean, governing 14,500 should be our support for this pair going forward. So as long as it's trading above this area going into the latter part of this week, then we can definitely confirm that we should be looking for opportunities for further bullishness to the upside. So pullback at the moment now, but you can see that it's now going into the European session open as we speak. You can see it's consolidated slightly on an intraday. So let's have a look at the intraday. You can see on an hourly, for example, not much movement after the break higher, primarily because Easter weekend, and you'll notice that it's still trading above the 200 period moving average in a consolidation band. Now there's two ways of looking at this. You can see that if I box it, those were prior resistance levels, and we've had a high. So you can see that 14, there we go, 14,500 is a prior resistance level and a new support. So looking at an hourly chart, that's where you draw your line. So you'd say to yourself, great, 14,500 is the benchmark. If it's trading above this area during the course of this week, then great, I should be looking for opportunities to the upside. Great, consolidating, you can see that. Now we need to see a bounce off that. We've seen it tested early this morning on Asian market GMT time, roughly around the 1 AM GMT this morning. We saw the euro lose ground against the US dollar, and by doing that, forming a swing low from the prior high. So you can see that the highs are getting lower, and now we're being squeezed to the downside. Indecision coming into the European session open. So what we're looking for now is bullish upside movement. So ideally we want to see price trading higher than the Asian high or recent high. So you can see that we topped out roughly around the 1450-400 mark. So we need to be trading breaking, or price needs to be trading closing higher than that to confirm possibility of further upside movement. We have its support. Ideally, if it doesn't find ground and it keeps falling, you can see the CTC on this time frame is negative, so we could see further downside movement. It has to hold at 14,500 because we know that that's the long-term support and resistance area on a bigger time frame. If it fails to do that, then obviously we can look at 14,4600 as our next target because the 200 period moving average is there. There's another one roughly around the 14,40 mark. Another pause area roughly around the 1434 mark. Another one rough small support at 1427, and then ultimately down at 1420. So there are a lot of opportunities here. So first port of call today, price needs to be trading higher than 14,500 going into the US session. If price is still not still trading above that, then look for consolidation, a possible retempt because it's quite a strong resistance level in the past. So we could see a bit of support happening at this. If it fails and it breaks lower than that, then we know that the momentum drive is quite negative and we should be looking for shorting opportunities. However, as long as it's trading above 14,500, there's a possibility that we could see a bounce on this resistance level because it's quite strong in the past, and we could see another attempt at the highs. So be aware of that, guys. Next up is sterling. Just want to have a look at the daily time frame. Here again, like its counterpart, you've seen a massive break to the upside. We said that roughly around the 16,400 mark there was going to be a strong resistance level. You can see price failed to break this level on numerous occasions over the past couple of months, and sure enough, we saw a slight pullback, still trading above all the moving averages, and then a nice bounce to the upside. Bullish engulfing candle on the 200 period moving average, which was a prior support area. You can see I'm just building this pattern up, picture up as I go along. So price traded lower on that particular candle but closed higher. So a lot of people might have been caught out on that. CTC is still positive across the board. We saw a bounce, and this bullish engulfing on a support area at 16,2500 just gave us an indication that there was far more bullishness still to come to this, and sure enough, the next day and the day after we saw the prior high being broken with a lot of momentum. However, in the last couple of days, we've seen price revert to the downside. As long as 16,400 intraday is used as a support area on a prior resistance, then we could see possible bounce to the upside with a likelihood of further gains to see for the remainder of the week. As it sees now, it looks like we're looking for opportunities to the downside on an intraday time frame. It's trading at 1644.10 at the moment, so there's still a little bit of wiggle room to the downside to capitalize on that. So intraday, even though daily we're looking at long term, if you want to scalp some pips to the downside, there's an opportunity here to look for opportunities to at least the 16,400 mark. So looking intraday, you can see the momentum on an hourly chart, the swing lows. You can see price moving lower, indicating momentum shift. And I mentioned, we know that 16,400 is a long-term support and resistance line, so we put that in. So we can see straight away, as long as it's trading above 16,400, we know we are bullish still. If it's trading below that, then we should be looking for opportunities for shorting, for a possible short. Okay, so you can see that this momentum drive, we're seeing a pullback of that momentum. This breakout here, we're seeing a consolidation now, and then all we're waiting for now is we're going to bide our time to see if we can see an opportunity to gain entry into this chart to the upside. So if you want to, you could be in this trade on a small time frame. Why? Because it's now trading below a prior resistance support area on an Asian market time frame. You can see the close of Friday, and then the Asian market open last night. We saw it failing to break higher than the prior swing high or low, apologies, and by doing so it's now created a lower swing from the prior one. So we know market direction is negative, and the CTC has gone negative as we speak, and you can see on the hourly time frame price is trading lower than the prior low that we saw at 2 a.m. GMT this morning. So looking at a 30-minute chart, if the 30-minute candle closes lower than this area here, then look for opportunities to go short to at least the 1640 being your first potential target. Next up is US dollar against the Swiss franc. Let's have a look at the daily time frame. You can see the momentum on this one. If I just zoom straight out, so you can see at least the years of the data, you can see we've been trading at an all-time high, well up here at the 11,600 mark, and now we're trading way down. It's an all-time low for this pair. We've broken lower and traded lower on numerous occasions here. We had a really big breakout to the latter part of this year, pulled back, and then we've seen a continuation to the downside. Prior massive swing, low, second direction. CTC is well extended in our favor. Moving averages well evenly spaced out, confirming that strong trend direction. Last couple of days, we've seen price reverting back to the downside again after an initial break of a prior support area. If I can just move that up, there we go. There was the prior support area, a breakout, and we saw price consolidating with it, and then we traded lower. Asian market and European session open this morning. We've seen price pull back slightly, and what we should be looking at is this trend here, this intermediate trend, to be our goal set. So we know as long as it's trading below the prior support at roughly the 0.892 mark and the trend line, then we should still be looking for opportunities to sell. However, if we see price revert to the upside and break above this, then obviously it's going to start looking a bit more bullish. We might only see that creeping in during the latter course of this week, and if that's the case, then we should be looking for an opportunity probably to the upside. But however, as it stands at the moment now, everything's still looking bearish on a daily time frame, which is governing price direction, and we should be trading in that direction. We don't be trading against the bulls unless there's a possibility to get those pip movements that we're looking for, and obviously for that to take place, then we want to see volatility or an indication of price movement in our favor. At the moment now, for example, we could either bide our time and wait for the charts to give us an indication, i.e. you can see at the moment now that price is well on its way to the upside. If we have this candle here closing and engulfing this candle here, and also breaking these two support and resistance lines, i.e. trend and support and a prior support, then there could be an indication that we're seeing a morning star formation taking place, and then that could indicate that, hold on, we could see a bit of bullishness creeping into the market for the latter part of this week. So we should possibly look for an opportunity for consolidation to take place, and by doing so, an opportunity possibly to profit to the upside. However, as long as it's still trading below these two lines here in Mars, then we should be looking for further opportunities to short. So until that gives you a clear indication that we're going to see price direction moving to the upside, then we don't, and we look at price or looking for opportunities to the downside. So intraday we should be looking for a consolidation to take place, but be aware though, this prior one over here, this little indecision counter you saw here, that is also a swing. Yesterday's down movement created the prior swing, so we know this swing is lower than that one, which is lower than that. So we know that momentum. So that can be our yardstick. If it's failing to trade higher than this yesterday's open, for example, or the high of this candle here, of Monday's candle, so the high of 0.8874, if that's not breached, and you don't see price trading above that going into the US session this afternoon or the close of the US session this evening and looking at the Asian market open, then there's a clear indication that momentum is still not in our favor to the upside, and we should be possibly looking at further shorting opportunities going into, say, Wednesday's trading session. So use that as a yardstick. Not trading above this going into the new session tomorrow, Wednesday's trading, Asian market open tonight, then look for opportunities to the downside. If you look at an hourly chart, for example, you can see we've had a noticeable bounce, two support areas at 0.8790, so strong support here. Has to be trading lower than that to obviously confirm further downside movement. As long as it's trading above that level, then obviously we could see a possibility of a bounce to the upside. 200 period moving average is still moving and still acting as a resistance level. Notice the CTC is in our favor. That was a prior support area just above the 890-100 mark, and you'll notice that the new resistance level just recently is roughly around the 88.70 mark, and that will come into the 200 period moving average time frame. So as the yardstick, needs to be trading above 88.70 on an hourly time frame to even consider bullish. Two of our criteria we met, but there's still one to follow. It's trading as we speak now in a consolidation band. You can see since trading higher on the Asian market open this morning, it's now consolidated. And the previous consolidation band at 88.50, failed to break above that. There's no point in trading between these 2 points here, because it's just, if you factor in your spreads, etc., you're not really making any fun. So it's ideal that we should be looking for primarily an opportunity to be trading above a very strong prior resistance level for further upside movement, or looking for possibly breaking lower at 8.879 to here to give you further confirmation of opportunities to the downside. Last remaining pair of the day is the US dollar against the Japanese yen. Here again, I'm looking at the daily time frame. After the intervention we saw from the G7 countries as well as the Japanese government by selling their own currency pairs and buying US dollars, we saw an inversion of this massive downtrend. But this uptrend, or the intervention, was very short and sweet, and since then we've seen the US dollar falling back to parity in terms that it's now trading lower. We expected a bounce and a continuation at the 83.50 mark. That didn't occur, and primarily because that didn't occur, then obviously we saw this initial intervention and bullishness obviously is just a stopgap and reality bites in a sense, and we've seen price revert to what it was doing prior to that intervention. We can see now as we speak it's testing a prior support. As we get closer to this 81.50 mark, we're seeing hesitation in the trading wicks. A lot of indecision. Asian market trading very indecisive, and European session open hasn't really done much with it as we speak. But we can look at the 81.50 mark as a dipstick or a guideline, so we know that there could be a possibility of a bounce at 81.50. If support's found at this area, then obviously we could see another attempt at the upside. Failure to find support at 81.50 and a break low, it will just confirm that this intervention, this initial oomph or change in market direction was just a blip in the trading sense. And what we're seeing is price reverting to what it was doing prior to all this happening. And we know that there's been a lot of action in the Japanese market, primarily because they've been through quite a horrendous couple of months with the tsunami, the earthquake, the tsunami, and now the issues they're having with their nuclear facilities and radiation, etc. like that. All this has acted really negatively on the market, and a lot of aspects have really not gone according to plan for this country, the Japanese. But as I said, I mean, we can look at it. You can see the CTC on a daily is all pointing for negativity. Possibility of consolidation at the 81.50. Just keep that in mind. If going into the latter part of this week, we're still seeing the US dollar trading higher than this against the Japanese yen, then there's an opportunity that we could see a bounce to the upside. However, we see this particular support area at 81.50 being breached quite soon in this week, then we could see the remainder of this week being a setup for further selling opportunities. So look at the hourly chart, for example. You can see that support, but you can notice that the swings lower as price is finding support at this area. So momentum is still negative. CTC is well extended, bar a couple hours that we saw on the 20th. But even then, when it went blue, we still hadn't broken above a very strong prior support area at 83. And by not doing that, there was no need for us to be trading unless you'd been actually trading the smaller time frames back here. So that opportunity there on an intraday would have been feasible, but if you're looking at a longer time frame, it just wouldn't have fitted your criteria, and purely you should have still been looking at that as a possible pullback of a breakout and then looking for the continuation entry. So as it stands now, support 8160 is where it needs to be trading lower than. You can notice that on intermediate, you can see the price direction, swing lows as we're going into the European session, and we're being squeezed now. So what's price likely to do? You can see it's trading below all the moving averages, and the CTC is well in our favor. What we need now to confirm further downside movement for a shorting opportunity entry is to close lower than 8160, to be trading lower than 8160 and closing lower than 8160. Doing that will follow. All the eggs will be in our basket, and we should be looking for opportunities to the downside. Failure to do so, then we should be looking for consolidation to take place, and then we're looking for a breakout of a prior strong resistance area. You can see that we have a band here that price is trading in at roughly 81.95. So trading above this band would give us an indication of a potential trade to the upside, and we could look at a possibility of 82.40 between here and there, which is going to bring us back to the 200 period moving average as a possibility of a trade to the upside. See how I'm putting it all together? That's it, folks. I hope this has been okay for you. Hope you had a fantastic weekend, and let's get back to doing what we do best, trading. Make sure that your money management rules are in place. Wait for price to give you a clear indication of what direction is going to be, and you trade in that direction. I'm just looking at the figures here, where the money's at. The euro is definitely still bullish. In Mars, everybody seems to be in this for long at the moment. So just look for confirmation breakouts and opportunities to capitalize on that. Sterling, here again, it's pretty indecisive. But as it stands now, there's still momentum to the upside, but very iffish. We are trading around. The indications are that it's quite flat at the moment, but the momentum is still slightly to the upside for this pair. So there again, look for further opportunities for possibly more momentum to the upside and an opportunity to trade that. Next pair, here's a Swiss franc, is still looking very bullish. Net position at the moment now, everybody seems to be long on this pair. So look for opportunities for definitely further momentum. Shorting on this particular pair direction still seems to be to the downside. And our last pair, the Japanese yen. Here again, it looks like there's consolidation on this, but primarily there seems to be more shorting opportunities for this pair. So by the time, like I mentioned, look for a definite close and a break and close lower than 81.60 to confirm that setup for you. All that remains to say is trade serenely.